Hi YouTube, happy to be here once again. In this video, I actually want to show you how to be more profitable, or should I say, how to be consistent with your profit. Because a lot of people blow their accounts, but in this video, or some people, a lot of people find it difficult to make consistent profit. But in this video, I want to show you how to keep making money even when you lose, how to keep making that profit consistently. Okay, so let's go to my computer screen. Don't forget to subscribe and like the video. And if you want to join my mentorship class, check my link in the bio and send me a DM. You will see my Telegram and IG link there. So just send me a DM. So let's go to my computer screen. Don't forget to subscribe, okay? Because there are so many things you are going to learn from the channel. So let's go to my computer screen. Okay, so now that we are on my computer screen, there is something I want you to understand. And it's all about it's all about maximizing your profit. Because for you to be consistent or for you to be profitable as a trader, you have to understand risk management in another angle. I'm not talking about when I say in another angle, I mean you need to know where to place your stop loss, and then you also need to learn to maximize your profit. I want you to pay attention to something. If you look at this my recent trade, because this is my recent trade, you will discover that my stop loss is just below it should be sorry, my stop loss is just below, what's it called, just below the double bottom here. As you can see, it's just below the double bottom here. And the thing is this: if you look at the size of this stop loss compared to what is here, okay, you can see this is massive. Okay, this is massive. This is about 1 to 10 or 15 self. If we are to consider things, okay, we will find 10 of this here, or probably 15 of this here. Okay, if you look at my other trades too, you will see something like that. Maybe this one is not too great. Maybe this one is not too great because I exit the trade early. Yeah, I exit the trade early for some reasons which I can't talk about here. But let's just leave which I don't even remember. But look at this one too. Okay, look at this one. You can see the stop loss, and you can see this. We see 10 of this here. Okay, so the idea here is that it is not about the number of losses that you have. It's not about the losses, about the number of losses that you have. It's about you learning how to maximize a winning trade. If you look at all my trade except this one that I take early, you will discover that even the resistance are no I don't pay attention. I don't obey. You can see resistance here. A lot of people will take profit here. Okay, and this is about, maybe it's going to be around 5 to maybe 1 ratio, which is fine. Okay, which is fine. But you will discover that I don't respect resistance. The only this one exception to this one where I decided to take my profit here when I'm supposed to still be holding the trade. If I'm holding this trade, I'll probably get out from here. Okay, I'll probably get out from here and wait for this retracement, then continue again. Okay, but if you look at this, you will discover that even this one too, I didn't hold the trade for too long. Like, I didn't hold the trade. That is because I already made massive profit. You can see the profit compared to this SL. So now, how many SL do you think I'm going to hit before all my profit is gone? It's not possible for me to just be losing back to back like five, 10 times. Even if it is 5, 10 times, I know for sure that whenever the winning comes, it comes in huge, and it always override all my losses and then give me profit in the long run. So the idea is this: whenever you are trading, make sure that whenever you are taking a trade, you want to make sure that you maximize, you hold your trade, you trade with stop loss. Okay, that is the first thing I want you to understand in this case. The second thing I want you to understand is that when you trade in the general direction of the market, you don't necessarily have to be scared of the resistance. If you look at all the trade I've taken recently, even in the past, you see that it's a buy trade. Look at this one, buy trade. Look at this one, buy trade. Look at this one, buy trade. Why is it that I buy instead of selling? The reason I buy is that buying this kind of asset gives you room to hold the trade for a long time. If you are selling this kind of stocks, if you are selling this kind of assets, you don't want to stay too long, because before you know it, market is going to reverse anywhere. Market can reverse anywhere. So you don't want to capitalize on the sell trade. But if you buy such market, you can hold it for a long time. Imagine if I decided, when I bought this trade here, imagine if I decided that I want to hold and keep holding. You can see how the market kept going up, kept going up, kept going up until it got here. This is going to be crazy. That is because you are trading in the general direction of the market. Okay, but imagine if I decided to sell from here. This is just where the market is going to get to, and then move back. Okay, and then this one too, look at, if you decide to sell from here, look at where the market got to and then reverse back. So if you sell from here, look at where the market get to and move back. So these ones don't usually give you yes, you are going to get winning trade, but it's just going to be short and brief. And then there is also that possibility of having your stop loss hit when you try to sell a market that is bullish. Okay, like when you try to sell this kind of market. Okay, just imagine if you decide to sell this market from here. Okay, let's say you enter here, for example. Let's say you try to sell and then your stop loss is just below this point. Okay, it's just below there, because it's always below, my stop loss is just below it's always below my resistance, which is in this case here. Okay, let's say the market just decide to have the setup. Look at the market go, and then end up hitting the stop loss. The stop loss actually got hit. Okay, you can see it gets heated. So that is the disadvantage in trying to trade against the direction of the market. Okay, against the direction of the market. Imagine, or if you decide to sell this assets now, you try to sell. Okay, I don't know, are you trying to target this place? Okay, are you trying to target this place? Because I don't understand. If I target this place, this is 1-to-1 ratio, and this is a very poor trade setup. Okay, so it is not advisable to consider selling a market that is bullish. So this market is a bullish market. Okay, and when you try to follow the direction of the market, you can hold the trade for a long time. So this is how I maximize my trade. This is how I maximize my trade. And most of the time when the market goes in your direction like that, when you follow the market direction and the market goes in your direction, then you can hold the trade for a long time. Okay, what you are seeing here, so it is happening in Nasdaq. If you check my Nasdaq trade, you will see me. You can see this is my Nasdaq. You can see the beautiful trade I caught during that US election. And if you look at in the past too, I have taken so many beautiful trades like that. Okay, you can see, imagine if I'm still holding this trade, it's going to go, because it's in the direction. You can see the resistance here is not respected. It blew through because the market is in a buy trade. Even this one, you can see the resistance. The resistance doesn't get respected. It blew through. Okay, that is because the general market of direction of this market, you can see this one too. Okay, so the general market, the direction of the market is bullish. Okay, so the question is this: how do you know the general direction of the market? If you place, let's start with S&P 500. If you put it in, let me say, weekly time frame, higher time frame, basically, and you look at the whole picture, okay, and you look at the picture completely, you look at the whole picture, what do you see? Okay, what do you see? You can see S&P 500 over the years, since inception. Okay, since about 1980 something years, I guess. The market has been going up and up and up and up. As you can see, as you can see here. So this makes this any reasonable investor or trader to consider buying this asset. All you just want to wait for is whenever you see a dip. When you see a dip, then you want to, like, what I mean by a dip is when you see market retrace for one reason or the other, regardless, you just want to buy. Okay, if you look at when market was reacting to what's it called, COVID-19, it came down, and after that, what happens? The market starts shooting up. So whatever prices that brought the market down, at some point in the market will pick up. Okay, in as much as the world is not heading, the market will pick up. So you always want to see any dip, any bearish movement as an opportunity to buy stuff like this. So the same thing applicable if you check Nasdaq too. Is the same thing. Nasdaq. Okay, let me zoom in so that you can see. Okay, so look at Nasdaq too. Similar thing. You want to consider buying these assets all the time. So the same thing applicable when you are trading gold. It is preferable to buy gold than to sell. Okay, so if you look at gold, okay, you see that it's also in an uptrend. Okay, gold has been moving in an uptrend over a long period of time. Okay, it has been moving an uptrend. So when you want to trade assets like S&P 500, Nasdaq, Dow Jones, gold, maybe what's it called, Russell, you want to consider buying because these stocks continue to grow, go to the upside, and then you can also hold those kind of trade for a long time. Okay, now let me show you opportunity that is about to happen probably next week now in the market that you ought to be looking at. Okay, you see, if you look at all the trade I've taken in gold, for example, everything is what's it called? Is a buy trade. Is a buy trade, except probably this one. Buy trade. Okay, this is the last one I took, which I didn't even. You can see it breaks through. I actually regret closing this trade. Actually, it breaks through, and you can see gold actually went up for a long time. For a long time. I missed that. Okay, I missed that. I missed not holding because I hold. I don't pay attention to all this resistance. I don't. Okay, but in this case, I close the trade. I don't know because sometimes I just close trade when I see that I'm so much in a lot of profit. So now gold, I've actually been expecting gold to retrace over a long time. So the day I saw this head and shoulder pattern, I know that gold is likely to drop. Okay, and but because I don't sell this kind of market, I rather wait for that drop because that drop for me is an opportunity to trade. So I won't trade the drop. So when I saw this, I was expecting. In fact, I told one of my students that gold is likely to drop because that my students try to buy around there. Okay, no, he bought, let me put it this what he did. He bought around there and I told him to exit the trade because I'm not sure gold is going to continue to go up because the market it needs to breathe. It has been going up for a long time. It needs to breathe. So, and the pattern that I'm seeing here is one of the price reversal pattern that happens when price want to take it. And as soon as it closes, she closes that trade, the market start dropping. Okay, and the market has been dropping. So right now what I expect is I expect my usual double bottom to form, just like as you can see it there, to form here, because that tells me a lot of things about the market. So then I want to take the trade. Okay, I want to take a buy position from here, and then when I take that buy position, I will be targeting this particular point. This is on 4 hours, so imagine if you go to lower time frame, this is a very long distance, and even if I make it here, there's no possibility. I'm not sure I'm still going to close the trade. All I will do is this neckline here, I will move my stop loss just below here and then continue to hold the trade. Who knows, it's going to form another higher highs. Okay, so that is likely to happen. Okay, but at least this is my target. So if you look at S&P and Nasdaq as well, they are showing similar opportunity. Okay, as you can see the retracement that has happened because after this move, everybody is going to take profit, most especially this move that is driven by Trump election stuff. So now this is what I'm waiting for. The same thing applicable on Nasdaq. If I see all this pattern next week, I am going to go long on S&P 500, Nasdaq, and then gold. Beautifully, those are the three trades. So what I want to tell you is whenever you enter this style of trade, just say, oh, the next resistance I target, you hold it. You can move your stop loss just right below it and then continue to hold the trade and see what happens. So if you come back and retrace, you will still be in profit, and if it continues, you are going to hold or get more money from it. You can see this resistance got broken. If I had target this particular resistance here, okay, my profit would have been limited to this point, but imagine me taking it over here. So this is something you want to understand about maximizing and remaining profitable. I can tell you that even if you lose trade 3 times back to back, you lose first time, second time, third time, by the time you enter the fourth time and you capture this kind of trade, it's going to wipe out your losses and still give you more. You are still going to get profit, and you don't necessarily have to change your loss size. You don't need to increase your loss size. Okay, you just have to create stick to your loss size. Okay, so that is what I want to tell you. If you find this video very helpful, please subscribe and like the video, and don't forget you can share to your friends so that they can also benefit from this. So if you want to join my mentorship class, don't forget, check my link in the bio and send me a DM.